From our Stars and Dogs segment, it's time for this week's Star.
All right. It is no secret that oil has been a bullish winner this year, and ConocoPhillips, symbol COP or COP on the New York Stock Exchange, has been a major beneficiary of this. ConocoPhillips is an oil exploration and production company based out of Houston, Texas. The company explores, produces, and transports crude oil, bitumen, natural gas liquids, and liquefied natural gas around the world. It is operating segments in the US, Canada, Europe, the Middle East, North Africa, as well as Asia. The company's strong Q2 earnings, as well as a rebound in energy prices after a July dip, has allowed the company's shares to grow 19% over the last month and 54% year to date to the current $113. The company had a Q2 profit of $5.1 billion or $3.96 on a per share basis, compared to $2.1 billion or $1.55 per share for Q2 2021. The company has declared a dividend of 46 cents per share, as well as a variable return of cash, commonly known as a special dividend, of $1.40 per share. In addition, is looking to repurchase $2.3 billion in shares. Unlike some companies in the sector, ConocoPhillips does not hedge its exposure to oil or any other sort of energy, which has allowed it to reap the rewards of the surging energy prices. On the other hand, the company is lowering shareholder risk as it's returning its extreme profits and cash to the shareholders. The alternative being is investing higher into projects, which carries more risk, especially as we're looking 20 years in the future for these projects. Even at the heightened price, though, the company has a trailing dividend yield of 3.9%. ConocoPhillips does carry a net cash position, though, of $8.8 billion, which is lower than the previous quarter's net debt position of $11.7 billion. The company has reduced its debt by $3 billion since it's announced its goal of reducing debt by a total of $5 billion. The company is currently trading at a trailing PE of 10 times, which is on the high end of its historical valuations end. Unlike Snowflake, it has more than a year and a half to decades behind it. Going forward, an investor needs to be well aware of the macroeconomic risk of oil and gas, of course, as well as how the company is managing its cash inflows and outflows. The recent boom in oil and gas prices, as well as strong returns of capital to shareholders, is why ConocoPhillips is the star of the week.